joining us on Market Pulse. Now, asset reconstruction companies seem to be losing out post the RBI's circular, which has tightened bad loan sale norms. Rating agency CRISIL expects the ARC growth will moderate by just over 30% in a year's time, and this after the ARCs saw the AUMs jump nearly 40%, and that's in a one-year time frame due to the frantic selling by banks. To discuss all of this, I'm being joined by Rajat Bhal, the director CRISIL Ratings, right here in the studio. Also, I'm being joined by Saloni, who will get us the details of this. But Saloni, let me come to you first and ask you, run us through the details of what really is being said as far as the ARCs go.
Well, Sunanda, as you mentioned, this is the RBI circular that has tightened norms for bad loan. We saw a frantic and a flurry of bad loan sales by banks, especially by the end of last financial year. Now, CRISIL estimates that the ARC growth will moderate to about 30%. So, we're seeing a growth tempering of about 30%. Remember, now in the last financial year, till June 2014, the AUMs have reached about 42,000 crore. That was CRISIL is estimating, which is almost a 4 times increase in a full year. Largely, the impact of the circular will be because, remember, RBI has now asked ARCs to go ahead and hold 15% of security receipts as against 5%. So capital raising will be a huge problem for them because they will require upfront capital to hold that 50% of SRs. Also, ARCs who can raise capital will be better positioned. Also, there will be a track record. Remember, they'll get 6 years time to make a plan for the asset sale, and ARCs with a better track record, CRISIL says, will hold critical long-term sustainability. Also, aligning pricing strategy with banks as per the new circular will be the biggest challenge. So this is what CRISIL largely outlines. So to give you a brief of what the RBI circular really said, of course, the 15% ARC, the SR security receipts was brought in. Apart from that, ARCs were also asked to put out a list of willful defaulters, make that available. Also, if these assets are sold over and above the book value, ARCs have to give an explanation of that, or if they are sold lesser than the value projected earlier. So some of these guidelines, of course, going ahead will tighten the entire ARC norms and will put pressure on banks as well, because they have been going to ARCs for the sale of their bad loans.
All right, let me welcome in Rajat at this point. Rajat, thanks for taking the time to come down. So you are expecting a 30% impact as far as growth goes, and that's just in 1 year. But where do you think this major impact is going to come in terms of their growth?
So I think, thanks Ananda, first of all. As you said, we are only expecting about 30% growth this year, which is substantially lower than what the projections were at the beginning of the year. Largely this fall is because of the guidelines that came out 2 days back, wherein the requirement to hold 15% capital or the SRs by the construction or reconstruction companies. So it's gone up from 5%. Now, what this does is you have to look at while the growth is really expected to come down from our initial expectations that it could double from last year's estimate. We also have to look at a key point that while yes, the growth is going to come down, the quality of growth is going to be better. So there is a lot of talk that the guidelines are negative for the ARC industry, that their growth is going to significantly come down. But if you look at it from the perspective of the industry as a whole, and in industry, if you also take in the banking industry, it's a positive move from the fact that the 30% that we are expecting the growth to be will be growth that will be of better quality than what we were seeing in the recent times.
All right. Rajat, get your perspective as far as capital raising is concerned. Like you mentioned, of course, as against the earlier 5% of SRs, now ARCs will have to hold 15% of these security receipts. How big is the issue of capital raising for them now? Because due to this, we will see a lot of cash deals from now onwards.
That's right, Saloni. Capital remains a key concern for the industry. But again, looking at what we were expecting, a 100% sort of growth, where the capital requirement would have been much larger for the ARCs. So with the increase from 5% to 15%, the capital for every transaction goes up. But on an overall level, the expectation of the capital requirement from ARCs for the current year remains actually lower than what we were initially expecting. But it's still a significant challenge for the ARCs to get this kind of capital. And But there is interest, significant interest in the distressed asset space in the country from domestic players, but also largely from FIIs. So there is money that is waiting to come into the distressed asset space, especially if there is quality assets that are being purchased. And as I said a little earlier, the expectation with these guidelines is that the quality of assets that the ARCs will purchase is likely to be better. And if that were to happen, probably it will be slightly easier to get capital for the ARCs. One aspect that probably did not happen, which a lot of players were expecting, was maybe letting ARCs or the promoter of the ARC hold more than 50%. So that was an expectation that was there, which would have helped them raise a bit of the capital from their own parent, and hence also attract more investors coming in. So that's something which will remain a monitorable, whether some change happens there and how ARCs will be able to cope up with this capital requirement.
Rajat, to get your perspective on two more important things. Do you think that this is survival of the fittest, because we have some 14 odd, 15 odd ARCs currently? So do you think that this will lead to a cleaning up, or is this leading to the survival of the fittest? And also, ARCs for this year had projected an asset sale, bad loan sale of about 1 lakh crore. Do you see this target will be met? Because initially, of course, it will hit that particular bad loan sale, because from the end of the last financial year, we've seen a flurry of bad loan sale that these banks are approaching ARCs for.
Yeah, so definitely the model which the ARCs were planning to use for the year, which was buy more and invest only the 5%, is something that will undergo a change. There are ARCs who will be able to adjust to the model quicker. There are ARCs who never moved away from their model of cash based. So the ARCs which have the ability to get capital will definitely get benefited now that the requirement for more cash goes up. So they are the ones who will get benefited. The ARCs who are able to adjust to this requirement and are able to move quickly to the model of more cash will definitely benefit. So overall, yes, maybe we can see a bit of consolidation in the industry with some of the larger players becoming even more prominent. This was a pattern that we anyways were seeing in the last year, where a few players were participating more, and that's probably expected to continue going ahead also.
All right, Rajat and Saloni, thank you both for that. That's the view from CRISIL, which expects some consolidation in the market going forward, and also growth likely to temper down going forward. We'll take a break, but coming up on the other side, Ratan Tata has lost the plot, says Amit Mitra, the former FICCI president and West Bengal finance minister. Mitra has a fertile imagination, retorts Tata. Details of that verbal spat coming up on the other side.